Well,
We
welcome to Diversify. We're so excited you've joined us this September the 24th, Tuesday night. I'm Chad, and we have Diana. She's actually not with me tonight. She's in another state, so she's traveling. So I'm in Puerto Rico. She's in, where are you at?
Mississippi.
Mississippi. So we're so excited that you could join us. And I know there are a lot of new people that have joined in the last month here. So we want to just explain a little bit what we do for those of you that are new. So Deanna, would you like to explain, what we are about and what Diversify is about?
Sure. So we are passionate about being generous. We love to be able to help other people. And you and I learned something that in order for us to be able to help others, we needed to be okay. Like our finances had to be in order. So therefore, that's why we started sharing the things that we've learned along our paths and about the importance of diversifying our wealth, diversifying the income that we have to be able to help other people, to be able to be generous and help other people when they are struggling. And also, if there's anything that will happen, for example, in the nation or maybe at the work we are in, at least we will have other ways of generating income. So, not just by one funding stream, but our main goal it is to be able to help other people.
Yes, absolutely. That is why we are here. We want to empower as many people as possible. We want to share what we've learned. We want to learn from you guys. We want to hear what's worked for you, what ideas you have, things that you've learned, books that you've read, podcasts, YouTube videos you watch. We want to hear the things that are helping you because we know the world's changing and that we're always going to be, evolving into something new. Every day it's going to be something new. So we want to come together collectively and just share information and share knowledge. Um, as being part of the diversified community, everything we share here is free. We don't charge for any of this. This is completely open to everybody. So we encourage you to share this with your friends, family, invite people. We encourage you to invite as many people as you can to join the conversation with us. We'll continue to put out different content throughout the month where we've got toolboxes and resources we like to share. I think we have over 22, what do we have, over 22 hours of videos already that we've done over the last couple of years of these. So you have plenty of things to watch and catch up on. But this evening, we are going to talk about credit. This is a topic that affects every one of us, and it affects people all over the world. It's not just in the United States that we have, credit reporting agencies. Canada has a credit reporting agency. The UK has a credit reporting agency. Australia. So a lot of businesses, industries, our car insurance, our home loans, everything we do basically is revolves around credit. Whether we like it or not, it's an important factor to our whole, financial well-being. So what we want to do is walk you through some of the things that we need to be looking for. We want to talk about what the credit report is, how it looks, what it means, what we should look out for, the things we could do to prevent fraud, the things we could do to help our credit scores be better, to prevent people from stealing our identity. Deanna's going to share a little bit about that later with a story that she has pretty close to her heart. But first, we want to just go into understanding like your credit report. I mean, it seems basic, but it's not something that all of us look at on a daily basis. Matter of fact, you probably only see your credit report whenever you're applying for a loan, when you're getting a car, you're looking to buy, especially when you're buying a home, you're going through that process, you're going to see your credit report a lot because they're going to be asking you, the bank's going to be asking you questions about it. So the credit report is just a detailed summary of all your credit history throughout your lifetime. So one thing to keep in mind, as soon as you're born, you receive, in the United States, you receive a social security number. Other countries have different identifying numbers that they use, but in the United States here particularly, we use a social security number. So as a child, that social security number can be used to access credit. Yes, your kids that are 1, 2, 3 years old, if somebody gets a hold of their credit, or a parent wants to use their child's credit or social security number, they can use that number to obtain credit. So that's why this is so important, that we protect our credit, our social security number, our credit score, our children's credit, and we're going to walk you through some steps how to do that. The credit score is what the agencies use to, to score us, to see how credit worthiness we are. If we're worthy with credit, if we're bad with credit, can they trust us to repay a loan? So the credit scores range from 300 points all the way up to 850 points, which would be an excellent credit rating. They identify accounts that you use, credit cards, loans, mortgages, all these things are on your credit report. And
Yes.
all of these things affect your credit. Inquiries, when you're looking, you're at Marshall's or at your shopping mall, or you're at the Best Buy or whatever it is, and you're wanting to get a credit card there. Every time there's an inquiry pulled on your credit, it goes to your credit report, and it does have an impact on your score. So too many inquiries can reduce your credit score, that's why we want to keep our credit score as high as possible. Not just so that we have a shining star that says, hey, we're good with credit, but because it affects us financially when we get insurance, when we get mortgages, car loans, interest rates. So many things are tied to our credit. So that's where we want to be very careful how much we actually allow people to access our credit. If there's any kind of collections on your credit report, those will be reported too. These could be all different things, from payroll deductions. They could be from past bills, medical bills that weren't paid. So there's so much. This is really, it's like a report about your whole life, in your lifetime. They're tracking everything we do. What do you say, Janet?
Could I add, there was a moment when I decided to cut my credit card. I had a credit card and I said, I don't want debt in my life. So I had already paid off my car. I had just sold my house, my apartment, and I decided I'm going to get my credit card and I'm going to cut it. So I did that and I started paying everything in cash. A few months later, I learned, and this was as an adult, so not too long ago. I've been an adult a long time ago, but I mean, this wasn't too long ago. And I actually learned that my credit was very low. And it was low because I had no debt. They called it that I was invisible because I didn't have any more car payments. My previous apartment, the mortgage was showing up, but I had no longer been putting myself into debt. I didn't have credit cards. My bank accounts, they were showing on my credit report because all of your bank accounts also show there. And if you close them, it could also have an impact on your credit. Guess what? That was the reason why my credit was low, because I had no debt. And sadly, and I'm thinking this was maybe like 7 years ago, I had to get a credit card again. and they didn't want to give me one because I had zero history within the last couple of years of credit. So with me make thinking, right, I'm gonna cut my credit card, I'm gonna be debt free, I didn't realize that in our country our credit system is run on debt, on what they call good debt. So on this example, what could I have done differently? I could have kept my credit card and maybe just use it for my groceries for the month and pay them out. And that way, my credit will have stayed going and going, and it will have been in a pretty high number instead of having a very low credit score. So I just want to share that story. I have more coming.
Yeah, and that makes sense because think about it. The banks are what control basically everything we do when it comes to our financial lives. So they want people to borrow money from them. It's just the reality. So they want us to have credit. They want us to continue to purchase credit. The banks don't want us paying things with cash. They don't want us, paying off everything every month. They don't want us having a house that's completely paid for, our cars completely, because they make no money off of us.
Mhm.
So the system is set up in a way that you have to have some kind of credit. Like Deanna says, you have to either get a secure credit card which means you would put down a certain amount of money in a bank account and say it's a $300 limit. This is what I did when I first was establishing my credit when I was younger. I had to get a $300, I remember it is a $300 credit card with my bank. It's a secured credit card. So it's basically like having a debit card, kind of. So I put the money in the bank. It stayed in the bank. And as long as I just charged on that card and paid it off, they treated it like credit card. But when I got to that $300 limit, that was the limit. But what that did, every month it reported to my credit bureau that I was making those payments on time. So my credit score was going up at the same time. So for some of you that are just now establishing credit, or you've just lived by, I'm just paying everything cash, I'm not going to have it. And that's not a bad thing to pay things cash and own things, which we would love it. I would love it if our houses were paid with cash, our cars are paid with cash, but we're not there. And most of the people in the world are not there either. So we have to establish good credit. So these are just some of the ways you do it, by getting a secure, credit card, and you do it a low amount. It could be a $200 secured credit card. It doesn't have to be a lot of money, but it's not the amount of credit that you have, like the dollar amount. It's the timeliness of how you pay that back on time without any delays. So let's just take a look at like the credit report, the things that we should like review on our credit report. If you haven't pulled your credit report in a while or in the last year, we're going to give you a website that you could go to and you could pull it for free, because everybody is allowed to pull their credit report for free. But there's some things that we need to look at to make sure the information that is reported on your credit report is accurate. So for number one, verify your personal information is correct. Make sure that your name, your address, your phone number, make sure that it's really you and that's correct on there, because that can affect things on your report. Ensure that all the accounts are listed on your report are accurate and they're yours. Now this takes a little time to do this and pull your report, but listen, if you pull your report and you see a couple credit cards on yours that are not yours, chances are sooner or later those credit cards are going to stop being paid for, that somebody's actually stole your part of your identity to get a credit card.
Chad,
So
why don't we talk about that? That
yeah.
happened to us when a couple of weeks ago. I actually had to pull my credit report. I don't even remember for what it was. And when I looked at my credit, because nowadays, even if you want a phone, if you want to pay less money, they will even give you discounts if your credit score is good, right? So the thing is that I pulled my credit. I was able to look at my report, and guess what I saw? There were two, not one, but two different transactions that were not mine. One of them was done in this year and another one in December of 2023. I had never seen these expenses, these transactions, and they were under my name. One was like a store, and another one was a mobile company. I literally had to call them, and through the system that we will share with you in a little bit, I was able to share about these two different payments or companies. They were actually on collections, like they were saying that I have not paid them. So I was able to report them, and I have to go back again basically like in 2 months and make sure that they were removed out of my credit. So that just happened literally less than a month ago.
And this is important because we've even taken precautions to try to prevent this from happening, and it still happens. So nothing's 100%. All these are just like things that we could do. We want to be as proactive as possible. But since we had to, and this wasn't that we just checked our credit just sporadically just to make sure everything is good. We were actually getting a new cell phone or something like that, and they pulled it, and it was something was not looking right. So we
Yeah.
found out. So we're even, this is good for us as a refresher too. That's literally why we're talking about this right now, because we know how important this was, because it takes, and on top of that, it takes hours of your time. You got to call the credit bureaus, you got to write a dispute. So it takes a lot of time out of your week just trying to correct something that you had nothing to do with, and that you didn't, it wasn't your fault. But it's the way the system is, so we want to stay on top of it as much as possible. So, we want to identify any errors, look for any discrepancies in your account balances or payment histories. If you know that you're making your car payment on time every month and it's showing it's late, there's something going on that you need to talk to, like the mortgage or the car loan company that you have, to find out why they're not reporting. Um, Check accounts that you don't recognize, fraudulent, and that's what we're talking about. Ensure no accounts are incorrectly marked as delinquent or in collections. This goes back to just if you're paying it on time and it's showing as delinquent, you need to find out, because that's going to, if they're doing it one time, it could be two, three, you never know. Because every time you get the delinquency or a month in, it pings against your credit and it lowers your score.
Yes.
So, there's some things that you could do to improve your credit score. Deanna, do you want to talk about those?
Sure. So I love what you were sharing about getting the credit card, the insured credit card, because again, I was over 40 years old. I was a ghost for credit, and that was one of the ways that I actually was able to do to improve my credit score. I was able to get, on my case, it was like $500 secure credit card where I gave the company $500. Then they sent me the credit card. So it almost comes up like a savings account, right? And then I was able to build or start building back again my credit using that credit card. So to improve your credit, right? I share with you one way, and that will really help increase your credit score, getting a credit card. I know it's sad because we're like, but we don't want to be in debt. we're not going to be in debt. We're going to pay that credit card immediately,
Mhm.
because you can even pay your credit card weekly if you want to. You don't have to wait until you get a statement. If you bought your groceries for that week and the gas, then at the end of the week, you can make a payment for your groceries and make a payment for your gas as well. Pay your bills on time. Cell phone. Listen, the issue that we're talking about was related to a cell phone. There was a cell phone that was put into my name. So pay those bills because they do show up on your credit report. Pay them on time, pay them in full. Sometimes we didn't pay $1 and we think that's okay. Well, guess what? Because we didn't pay that $1 for 1 month, 2 months, 3 months, it will start showing on your credit report. Reduce your credit card balances. If by any chance you are one of the people that right now have a couple of credit cards or maybe one credit card and you have not been able to pay it off, you're only paying the minimum, we would suggest to start paying more than the minimum. Start lowering those balances. Again, having a big balance doesn't help your credit score. What help your credit score is paying your credit card on a timely basis. So your credit card could be with a balance of zero. You used it for $100, you paid $100. But do not stop paying your credit card. Do not pay it late. Avoid maxing out on the credit limit. So if your credit card is for $1,000, try not to get it to 1,000. Even less, go over the $1,000, right? Because you know what happens? Sometimes that's when we start coming up and going to a cycle of debt because we think, oh, it's okay, I'm gonna pay it next time. And that's when we get into a debt problem. Avoid trying to open many accounts frequently. We go to Marshalls, and guess what? When you're about to pay, they tell you, would you like to open a credit card with us? You're going to save 15%. And they do that with many other stores, right? Many of them, you open a credit card, furniture companies, they will say, you know what? No interest, and you can open up your account. And I'm going to use this to share with you a small story. I went to buy like a bed frame, and they ran my credit because I was planning on putting it on the store credit card
Mhm.
because they were going to give me a big discount. And you know what they said? They denied the credit card. So that put me into thinking, well, why would they, actually deny this credit card? Well, about 2 years later, I bought it in a different way. About 2 years later, I get a letter, and it had a notification of delinquency, and it really got into me. Like I was very anxious, okay? And like, what's going on? So I decided to call. And this is the reason why having this conversation with each one of you about credit is so close to me. When I called one of the major credit agencies in United States, I was able to discover that there were between 8 to 10 accounts that had been opened under my name for thousands of dollars. I was living in the state of Massachusetts, and I had accounts in Chicago, California, Florida. different types of accounts, from computers to cell phones and many other accounts. My credit score was very, very low. And that's when I realized that my identity had been stolen and my credit was being used by someone or by many people. So it is very important for you that if you open an account and there's a red flag, they tell you you do not qualify, to listen to that red flag. Don't wait like I did 2 years after, and then you have more accounts because people notice that you didn't know they were using your name and not your address. I wasn't living in those places. So avoid opening new credit accounts frequently. Do not give your personal information to people that will call you. Don't share your social security number, your address, your phone number with random people over the phone. Regularly check your credit report for errors and dispute those inaccuracies. It creates anxiety on us. Let me say that. I was very anxious when I learned about the 8 accounts or 10 accounts over 10 years ago. That's when I decided I'm just going to pay everything off and I'm not going to have any debt. Check your credit report. It is okay. If you find an issue, what are you going to do? You are going to dispute that inaccuracy. And we're going to share with you how you could do this. Shad, would you like to continue now?
Yeah, I do want to say something about tips for improvement, um, practical things. So let's think about this. I know, so we all think about we want to be out of debt, which that's our goal, is for us to be out of debt. And then there's a lot of proponents out there that'll say you shouldn't worry about your credit score because you shouldn't worry about buying anything on credit anyway. But here's how it can help you. And this is how, and I want this for everybody, that there are better deals for people when your credit's better. When you have good credit, it opens doors to things that some people with lower credit scores don't have access to. And it ironically, it costs people with lower credit scores, which typically have lower sources of income, lower resources, more money to do the same things as it does somebody that has a good credit score. And I'll
Yes.
give you a quick example. There's a credit card that we have, that if you have a decent credit, pretty good credit score, it will give you access to when you have like an iPhone or an Android, you have to pay that $50, I don't know what it is, $20 extra a month, like a fee to protect your phone if it gets broken. It's like insurance, right?
Mm-hmm.
Well, this particular credit card, we discovered, since we have this card, if our phones, as long as we make our payment for our cell phones through this credit card, if our phone's damaged, the credit card will pay for the repair or replacement of the phone. We don't pay extra for the credit card. It's just a benefit of having that card. We had no idea. But for most people, what do most people do? They pay the extra $10 or $20 a month to make sure if they drop their phone, they could get a new one. So over the course of a year, you're paying $240 for insurance for a cell phone. Say it's $20 a month. That might be well, you might be paying for 2 phones, so it probably is $20 a month. I mean, we have a 13-year-old daughter, she got a phone, and we're gonna have insurance on that thing. Like many of you got kids, you're gonna have insurance on their phones because you know what they do. It goes everywhere. But what I'm saying is that's $240 a year that you're spending on insurance. If your credit score was a little higher, you could get a credit card that would pay that insurance for free. So these are just little things that, to show you the power of having a good credit score, it does improve. Car insurance, that's another thing, right? Your car insurance, they rate your car insurance on your credit score. This thing just started a few years ago. I remember the first time I was like getting car insurance and asked my credit score. I'm like, what's this for? And that's how they based it on your credit, They quoted me based on my credit, which is crazy. And we go back to that exact same thing I just said. Majority of people with lower credits have less money already. And we have to change that. We really have to change that, because it's not fair. It's not fair that one credit card offers these benefits, another one doesn't. And that credits, somebody could be a very good driver but a lower credit score. They shouldn't have to pay more for insurance than me. And I might have to be a reckless driver, right? It's just not right. So that's why we're doing this, because we want to help change this for everybody. But we have to put together an action plan. Like, what can we do to change that? We actually, talking about it's great, but we have to do things to put into practice to get our credit scores up. So the first thing, like Deanna was talking about, is pay down the credit cards. Let's reduce the balances by 20%. Set a goal to reduce your credit card balances by 20%. So it's not a lot, but if you owe $1,000 in your credit card, get the thing down to $800. And then, after a couple months, reduce that 800 down, to $600. Let's start working on reducing the balance. The next thing is, if you haven't done this, and hopefully all of you guys have, because we've been talking about this for like the last 2 years, is create a budget. Let's create a budget and allocate extra money out of that budget. When you find all the money you went out and ate out at Taco Bell and Burger King and all these other places, let's use that money towards feeding your debt, to pay it off instead of our stomachs. Sometimes I know we spend a lot of money eating out, and I joke about it, but it's like the number one thing that everybody does with their money.
It is.
So let's pay down some of that debt so we can improve our score. And set a timeline for yourself. Be reasonable. Let's do this in the next 3 months. Let's set a goal that, hey, in the next 3 months, and probably the majority of us have some form of credit card debt right now that we could work on paying down. If we're being honest with ourselves, we could pay some of that down. So let's set a goal collectively for all of us. In the next 3 months, we're going to pay down our credit, 5, 10, let's go for 20%. But if you can't do 20%, 5%, 10%, anything is better than not doing anything at all. Check your report, after the 3 months, 4 months, let's go back and pull our credit reports and let's see what happens. I want you to see the difference of how your score goes up, and then it'll be like a game for you, because this is what happens with us. You see your credit score goes up, you're like, okay, let's see what else we could do to get it. Go ahead, Deanna, were you going to say something?
Yeah, and again, is the credit card is not the issue, is how we use it, right? If you are paying your house payments, you have the cash, you're just using the credit card to purchase the groceries based on your budget, pay the gasoline. You pay the credit card every single week. You have it in a balance of 0, basically. You will be able to build your credit just by having one credit card. If your spouses, right, my husband and myself, he wasn't the one that had the issues with the credit, it was me. And again, my credit was bad, right, in quote, because I have no debt. So therefore, like at 42 or 41 years old, I had to start building my credit all over again. So you can do that by getting that secure card. And do not be scared. As long as you know how you're using it, you will be able to build your credit card, your credit pretty quickly with a credit card. You don't have to get yourself into a big loan. Credit cards help a lot increasing your credit score.
Yeah, there's online resources. For
Mhm.
example, you guys have probably seen this annualcreditreport.com. That's where you could go and pull a annual credit report. You could sign up for like Credit Karma, and you can see your credit score on there, and they'll show you some of your. It's kind of limited what it shows, but it's a good monitoring. You could pay for monitoring services that will actually alert you and that really deep monitor them. But that's, if you just pull your annual report and then you get like a Credit Karma or something like that, and just keep on top of, if you see a drastic change in your credit score and you haven't done anything, then you need to really investigate. That's what I like to use, like Credit Karma, because I could actually see my credit score, and if it stays pretty much stagnant or right around the same couple points for months, I know nothing's really changed. I know nobody's messing with my credit. But if I see a big jump or lower, then I know something's up, because I watch it so much, I know what's happening with it. So that's a good way to monitor it, right?
Yeah, I would also say you can open accounts. There's three large, what they call credit bureaus in United States: Equifax, TransUnion, and Experian. You can open free accounts with all of them. And we are going to be sharing a tool with all of you that have the links for these three agencies. So please be on the watch out this week for that toolbox for this specific class or conversation. There's the three links. You can open your account just with your email, with your password. And when you open the account, that's when you can see your credit score on each of these or companies. And remember when I was sharing with you that just about a month ago, right, I found out that there were two things under my name that I did not purchase. So what I did, I actually called TransUnion, and again, it is not easy to do because I've been there. Those are hard conversations. Most of us, we run away from the bills. We don't want to look at the bills. We don't want to have this type of conversation. So I had to take my time, my peace, and make a phone call. And through TransUnion, I was able to dispute both of the transactions. I was able to have someone on the call, and they helped me submit forms to dispute those two transactions. So a couple of years ago, when my identity was stolen and I had to actually submit a fraud to my social security number and my personal information, it was more than that because it was between 8 to 10 at that time. I used Credit Karma to submit different to dispute all of those 8 charges, and I had to share the reason and give them information through Credit Karma. But again, TransUnion works, Equifax the same. Ideally, you want to be able to look into the three different credit bureaus and look at the data that it's showing. It
Mhm.
should show, for example, your names. In my case, I've changed names because I got married, right? So you might have names, you might have a middle name. Make sure that all of them show correctly, like Chad was sharing before. There's also agencies that will protect they will protect you as a consumer, such as like the Federal Trade Commission, the state consumer protection offices. They are there to help you as well. Now, Chad, I'm gonna go and talk a little bit more about the fraud.
Yeah.
Remember how I shared that my identity was stolen. So something that I learned through pain is what I'm about to share with you right now. Important, even for your children and for your parents, the elderly, maybe your grandparents, you can set up credit fraud alert in all of your platforms. When you set up a credit fraud alert with your ID number and your name, people will not be able to use your information for credit. So you might say, well, Diana, if you did that, how was it that someone a month ago was able to use your information? That's when Chad was saying it's important to take a look. I do know that I have removed my credit freeze, which we're also gonna be sharing about what is that, for a couple of weeks, and maybe in that window of time, someone went again and used my information. I don't know exactly how it happens, but it is real. So even your children, you can set them up with credit fraud alert. This
Mm-hmm.
will prevent using your credit in an authorized way. It is free. You don't have to pay for the setting up the fraud alert. It is completely free, and you can use your three different credit bureaus to do that. It is very simple and effective. You will just need to give your information, but it will also help with monitoring your credit. If anyone uses your information, I'm going to give you an example. We went to get a device at T-Mobile. They were not able to run my credit or Chat's credit. We had to go in and remove certain parameters that we have for them to be able to pull this report.
Mm-hmm. Yeah, it's nice when that happens. It's frustrating at the same time because you're like, oh, I don't have cell service right now. I can't get on the website. I forgot what my login number was. But to know that it's protected, to have a credit freeze set on your account, everybody, I mean, every single person on this call that listens needs to go out tomorrow or tonight. If you have not done this, all three of the credit reporting agencies set up a credit freeze and freeze your credit like today, because this is the number one way to prevent people from stealing your identity and your credit. Because you cannot pull, I haven't been able to pull any credit reports or anything with a freeze. I mean, I think I even tried to sign up for, I've signed up for things that don't even use my credit, and they can't even pull up my identity because it's frozen. So it really does work. It's kind of annoying when you're in a hurry and you need to have your credit checked, but you know what? It's way worth it when it comes to protecting against something that could happen.
Yeah, and ultimately, right, if you are wanting to choose your credit, you know they're going to run it, so you can unfreeze it and then use it. And when you freeze or unfreeze your credit, you can put parameters. You can say, I want to unfreeze my credit for 3 days, for example.
Mhm.
And then that way you can prevent, again, people using your credit or stealing your identity.
And don't forget your kids' credit. Your
Yeah,
children, freeze their credit too. Their Social Security numbers just, a big of a win for criminals as yours. So you need to freeze theirs also for their protection.
yes. And my parents are elderly. And my mom called me a couple months ago. She was crying. She's like, I did something I should not have done, and I don't know why I did it. And I gave my personal information and my social security to someone that called me saying that they were representing her her phone company. You know how anxious she was? She was crying. It took her a couple of days to call her own cell phone company asking if they had sent someone to call her to give a discount because she was an elderly. So if you have elderly parents like myself, have this conversation with them. Make sure that they do not share their name, phone number, address, social security information with anyone in person or over the phone. And if possible, they might not be using the credit anyhow. Help them freeze their credit to make sure that no one will use it. Okay. So very important because like I said, we've been growing because of pain, right? I want to share another story. We had children files in a center, and this wasn't too far, like too long ago, but they were also digitally, and the company was hacked. This company was hacked, and they stole many children files. So people were wondering, why would they do this? Because of their information and what people could do with those four basic items: your address, phone number, and social security. So they had to report it to the federal government, and I had to also report that my identity had been stolen and submit a specific form, which we can share with you as well how to get it, because the identity had been stolen. Shad, anything else?
Yeah, also I want to talk about a little bit about protecting your credit, but also what happens when you already have a bad credit score and you want to rebuild your credit, right?
Yes.
A lot of talked about rebuilding your credit score. How do you do that? You've heard about these companies out there that you see, like, pay this amount of money and we'll get your credit score up in like a week or two. There's companies that actually do this, but there's a lot of companies out there that are like fraudulent, that really prey on, our desire to get our credit score back really fast, and they know that. So I just want to give you a couple warning signs of companies, to not specific company names, but the things that they cannot do. So these are the things that, a credit repair company will not do. So like one thing to look out for: in a fraudulent service offers promises to improve your credit score quickly, like overnight. Legitimate credit repair companies take time, and no one can guarantee a specific result within a short period. So let me say it again. No credit repair company, no person can actually guarantee that they're going to get a result. So if they say, hey, we can improve your credit score 100 points within like a month's time, that's a red flag.
Yes.
Demand for payment up front. If the service asks, hey, before we get started, you got to pay up front, and they start pushing you. The Credit Repair Organization Act, this is a government act, prohibits credit repair companies from charging upfront fees before services are rendered. So if a company demands that they get paid up front, they're not following the government's thing. So then you could spot this as a fraud.
Yes.
Claims to remove accurate negative information. No company can legally remove accurate information from your credit report. So if you have a judgment on your report, a delinquency that's actually you did cause, no credit repair company could take that off. It's legally, they can't remove it. So if they say they could take it off, they could get rid of it, they got attorneys that could do all this stuff, it's not legitimate.
Mhm.
Suggesting you create a new identity. That's
Wow.
just crazy. If they're telling you need to like think about getting your own identification number.
Mm-hmm.
Um, Lack of transparency. Legitimate credit companies should provide you with written contracts detailing the rights and services. If they're ambiguous, they're really not telling you a lot. This is something to run from. Discourage contacts with credit bureaus. If they tell you, hey, don't reach out to TransUnion, Equifax, Experian, we'll take care of that, and you'd say, no, I'm going to go ahead. No, don't worry about it. If you're getting that kind of pushback, there's probably some issue right there. They don't want you seeing something on your credit bureau. Scammers may be high pressure, which this. They're going to make you feel like you need to do this. Your credit's going to get worse. If you don't take action today, this could be bad. They might even say stuff like, hey, you've already called us. We've already entered in a contract. You at least have to pay us. They're going to prey on anybody. And they're going to get, like Deanna said, like somebody's mom or father or grandmother. They're going to get somebody on the phone that's going to get scared, and they don't know what's real from reality. From being, they just don't know. So what we have to do is protect people, and the better information we could get out to everybody, like these kind of things, to us now, we're hearing them, they're common sense, but when we're in the moment, we're not thinking about it. So these are things to look at. Another thing, if they don't have a physical address or a professional website, if they're off of a Facebook page or it's like a 1-800 number and there's really nothing, that backs them up legitimately, run away from it. Now, there are legitimate companies, and we will share a few of them that you can go to. Lexington Law is one of them. CreditRepair.com is a legitimate company. Sky Blue Credit's another. They will charge a fee to do this, but they're legitimate companies that are licensed or registered with the government. They've got reviews, and we'll share this in the toolbox that Deanna was talking about. But we just want to make you aware of like the things that you could do to repair your credit. The biggest thing is like what we've already talked about. Pay your bills on time, reduce your credit balances down. Don't get a bunch of credit cards, but do have one or two that you pay off regularly. Like pay them off like at the end of the month. And if you're not there yet, that's okay. But work to get to that point where you can pay that credit card off when you get gas at the end of the month, when you buy your groceries. These are like simple things that the average, person could do to improve their credit score pretty quickly. It won't take you have 5-6 months worth of, good payment history. Your credit score will increase dramatically. But when we, miss a payment, we forget a payment, it's it's on us. We have to be diligent. We really have to like be diligent.
I would like a little bit, Chad. Can you share with us about like the different credit points? What is, for example, being very good? What is the norm? Should be the target in our credit score?
So our credit score here is, if you want to have your credit score considered very, very good, I'm pulling up documents, sorry. Like
Okay.
close. All right. So let me just go through these. So an exceptional credit score would be 800 to 850. That's considered the best. You're the excellent credit. Very good, 740 to 799. So that's considered very good. You'll get a good interest rate if you're looking to buy a house. This is where you're going to get, like, I think the best, the most current rate that you look online. So when you're looking at a mortgage rates online, they're going on a very good rate. That's what they're showing you online. If your credit score is below that, you're going to get a higher rate than what you're going to see on that. The 6%'s like the average rate. That's for a very good credit score. A good credit score is between 670 and 739. That's average credit, generally qualifies for credit, but may not get you the best rates. Fair credit is considered 580 to 699. This is below average, higher interest rates, potentially difficulty obtaining credit. And then poor credit rate would be 300 to 579. Risky credit history, difficulty qualifying for loans, credit often requires secure credit cards and high interest products. So if you're in the poor category right now, let's try to get to the fair category. And if you're in the fair category, let's try to get to the good category. Let's move up incrementally. We don't have to put pressure on ourselves to move all at once, but let's build little by little. And if you keep staying consistent, I promise you, your credit will improve. You'll have more access to more resources as you grow, and it's going to just make your life a little bit easier.
Indeed. I remember I had just come out of high school, and my mom went with me to the bank. We opened up a bank account, and I did not know that because I opened a bank account, that already started my credit history. And it was good to have a bank account. And then after that, I learned that I could get a small credit card, meaning the secure credit card through my bank. And because I had savings, I was able to put those savings as a collateral for my credit card. And I kept building up my credit, Then I graduated from university and I needed a car. Mine broke, and I went and bought a car under my name only. And you know what was my interest because of my credit? 11.25% in a car. Mega high, right? But that was where my credit could take me, right? So it's even important for us to share with our children, nieces, nephews, like I mentioned before, with our parents. This is a conversation that it's important for all of us to have, especially when you have goals as a family and you want to be able to meet those goals within a year, maybe 2 years, whatever is the time frame. So this week, again, we're going to share with you a tool that is going to be attached to this conversation, to this recording. And remember that you have other recordings as well from about 2 years ago. So it's always so nice to be able to hear that people listen to this kind of conversation and they play it again and they learn from it. If you have questions, Diversify is a community. So you can actually post questions. You can log in on your computer using your username and your password, and you can watch the videos, but also type questions that you have, maybe about this topic or even about other topics. And if you want us to talk about something specific, send us an email or post it on our community. Hey, Chad and Diana, can you please talk about whatever is in your heart? And even if we have to address it in 15 minutes, we will do that, because if you have a question, other people might have the same questions as you do.
Yeah, so we're so thankful that you guys joined us this evening. I know we're at that 1 hour mark and we don't want to keep you guys, but we do want you to remember to remain generous. We do all of this because we want to be generous. And this is how we get to be generous, is when we start to repair our credits, when we start to build, our budgets. All these things is a combination of what brings us that position where we put ourselves in a place where, like, hey, we could give to the things we want to give to, and we could be free and not have to worry about money. Let us, let money, do its thing and not us worry about it.
Yeah.
But
So
thank you so much for joining us this evening. We're so grateful, every single one of you. Please comment in the community. Like Deanna said, we would love topics that you guys give us. I mean, if you don't give us any topics, we're going to just keep coming up with things. But we do want you to give us some things that you want to hear about, because I know some of you probably thinking, hey, I wish they would talk about this. Well, let us know, and we love it. I want, challenge us with different things that we could go deeper into and learn and discover, things that will benefit us all. So once again, thank you guys for joining us this evening. It's such a pleasure, and we will see you next month on our next one. We'll be announcing shortly what that topic's going to be. It's going to be a surprise, so we're not going to let you know yet.
Mary Lucy has a question.
Oh,
Yes,
yeah.
Lucy, go ahead.
First of all, I'm so sorry I'm late, but very interesting question. Actually, I was checking my credit because I enrolled in Credit Karma, and it's interesting because every time that I get a notification, I want to check my credit, and that's good because I usually used to avoid checking that because it wasn't good. But since it has been improving, I want to check it out. But the thing is that with that, I have been receiving like a lot of offers from credit cards, PayPal, and it's like, I don't know if I should even consider it, if I want to like join all those debts like in one credit card, howsoever, consolidate.
Mm-hmm.
Like to consolidate. And I don't know if that is good, if I get a good offer, or if that is something that I should avoid and just keep paying what I can. So
the debt consolidation. So if you're very good with the budgeting part, so say you got $2,000 in 5 different credit cards, and then you get an offer for a credit card that'll give you 6 months, 0 interest if you'll move that balance to consolidate that. If you could pay those credit cards off like within the 6 months on that 0 interest, yes, absolutely, it's a great deal to do. But if you know that you're not going to have the money in 6 months to pay all that off, look at the terms on the consolidation credit card, because it's usually probably higher than what you're paying right now.
Okay.
And on top of that, they're going to charge you a transfer fee. Almost every one of those consolidation cards charge a transfer fee, like a certain percentage of the debt. It might be 5% or 2%. So they're going to tack that on the top of it. So it's good if you could pay everything off. If you know you have the money, like if we had a bunch of credit cards and we knew we had the money to pay it off, but we just wanted to use our cash for the next 6 months instead of pay it off, that's great. But you have to really manage your money well and have a good budget and plan for that. I like the consolidation cards as long as you could do that. If you can, it's to manage cash flow. That's really what it is. They benefit the people that want to manage cash flow. Most people get them and then they never pay the thing off, and then they owe a bunch more money. And then what they do is they take their other cards that they just paid off and
Another credit card.
they start charging on them again.
And now they have a credit card with a 27.5, 23 point, like over 20% of that consolidation. We've seen it.
Yeah.
But with the credit cards, paying off that credit card, it is about even starting to pay off the smallest one. Pay off as much as you can, the balance. And then once you pay off the smaller one, whatever you were paying, let's say you were paying $25, then now you take that $25 and you add it to the next credit card, the second smallest one, until you pay them off. And what we've seen with people that do this is that they pay them off like in a year and a half, they pay off the credit cards. With the other way around, when people have done the credit card consolidation, usually they do not pay it off. Because if you have an emergency and you don't have the emergency fund, guess what you're going to use? The credit card. Because the credit card is still the emergency fund. But that was so good. It was a good question. And I think, Chad, that might be a good topic to talk about.
Yeah, like debt consolidation loans, all those, because there's so many
different products out there.
And I've used them before, so some of them work good. As long as you use them right, they work, you know. So I love it. I love that question.
Yeah, maybe it can be the next topic, because I know that a lot of people are like me. You know, I'm trying to do it better, but still I have the debt.
Yes.
I don't have the creativity on how to deal with that. But maybe you have. I'm sure you have. And that can be like a follow-up to this one. I don't know.
Yeah, we'll
Love it.
definitely do that. At one time, I had $60,000 in credit car debt, so I did those strategies to get out of it. So
He knows what he's
would
talking
I know
about.
exactly what worked for me. So it's painful, though. It's not easy. You have to give up some stuff.
He gave a lot. He gave up a lot. We learn from pain, right? Like this credit class was about that too. Like I personally went through a lot for whatever reason, but I learned from it. And that's the idea, like learning from it and helping others. It's a great one.
Any other questions? I mean, I could stay here and do this all night, but I want to go to bed too.
Well, thank you, everyone. Thank you so much for your time. And then it would be until the last Tuesday of the month of October.
All right. We'll see you guys then.